I think gold will probably, by the end of the year, probably 2,200. Okay,
Okay.
10%. I think that gold is very strong. One of the issues that we deal with in markets is, again, typically when markets get around these big whole numbers like 2,000, it couldn't hold it, it couldn't sustain it, and then it got hit below it and sold off pretty hard. But now, once again, we're building a nice base here between 1,900 and almost 2,000, right? Going back and forth. I think the next time through, I think we get to 22, 2,300, and I do see a close by the end of the year at probably 2,200 plus.
Recently, the price of gold approached almost $2,000 per ounce due to the belief that the Federal Reserve might not raise interest rates significantly higher. However, the excitement has faded, and now analysts are getting ready to carefully study what the Federal Reserve Chair, Jerome Powell, says after the expected 0.25% interest rate increase on Wednesday. Todd Horwitz, who is the Chief Market Strategist at Trading.com, holds the belief that the price of gold will probably rise and reach approximately $2,200 or more by the end of the year. Gold is considered a safe and reliable investment when there's a lot of uncertainty in the global economy. During times of economic instability or unpredictability, the demand for gold typically goes up because investors see it as a safe haven to protect their money. Todd believes that if there are struggles or problems in the world, it could lead to a breakout for gold and a change in the trend, meaning the price will start going up instead of staying stagnant. Gold prices and interest rates have a negative relationship. When interest rates go up, people move away from gold. When interest rates go down, gold becomes more appealing as an investment. Todd highlighted that the price of gold might be influenced by interest rates, but we don't know the specific interest rate level that gold is currently factoring in. Let's watch snippets from Todd Horwitz's interview, but before getting into the video, make sure to subscribe our channel and give this video a thumbs up.
I think there's demand. I think you're seeing some demand. Again, remember, there is a lot of pressure when markets are very slow and there's not a lot of capital for the average investor to invest in. They have to be careful. So we know there's always some natural pressure on metals by the banks as they try to keep prices lower, and people will call it manipulation. I just say there's not enough buyers to take them out right now. But I think as we start to see maybe some struggles, maybe some problems, maybe some other things in the world, I think you'll see that gold will break out, and then technically the trend will turn to higher, because right now in the short term the trend is a little bit lower. But I do think that it will turn the trend, and if we can get back over 2,000, I think you'll start to see a flood of buyers start to show up, and suddenly it'll start going up versus turning sideways. You have to remember that correlations are not always immediate, right?
Yeah.
What is the price of gold actually conning as their interest rate? Are they at 6%? Is it based at 5%? Is it based at 7%? We don't know that answer. It's a very similar question of when the dollar goes down or goes up, people say, well, commodities are going to go down. Well, that's not necessarily true, because we don't know the specific correlation and what that asset class is pricing at right now, because they may have already priced in 6.5% into gold. And that's where it is. So even if it doesn't make 6.5%, then gold could go screaming higher. Again, we don't know where everybody sits and how the pricing mechanisms of price discovery have priced all these assets out yet. I mean, again, we have an election coming up, which is always a little quirky. I don't think we've seen any major meltdowns during an election year. Now, again, this could be different this time. We'll see what the markets actually do. I mean, the markets are extremely overvalued and really being driven by just a few small companies, not small companies, but a few companies, right? This is not a broad-based rally. This is a rally that is driven. So could we see a major sell-off into an election year? You could. Again, I can't predict how everybody's going to react. I know what they look at historically here, and I know that the markets go up historically 8.5% year over year, and I know historically the markets are due for a pretty nasty correction, which is what I expect. But there are some things in the way here. It doesn't mean it won't happen, though, and I think it'll depend on how the election looks, how the politicians do, and who actually become the actual choices to run against Biden, if Biden is even going to be a candidate this year or next year.
Silver price is up slightly on Monday morning, trading around $24.52. It has recovered from support levels, and technical indicators are pointing to a bullish trend. Todd expects a rally that could lead to a price range of $35 to $40 per ounce over the rest of the year. Advancements in solar panel technology are causing an increased demand for silver. The industry is now developing more efficient solar cells that require larger amounts of silver, leading to higher consumption of the metal. Todd believes that there is a significant amount of demand for silver that has been building up. If the economy shows signs of weakness, people may turn to silver as a more affordable alternative to gold. Todd believes that both gold and silver present excellent investment opportunities at the moment. Additionally, commodities, in general, has promising areas to explore because they expect a significant market growth in this sector. Let's watch Todd Horwitz's interview with Liberty and Finance.
Yeah, I think silver will be in the mid-30s by the end of this year, which is a pretty significant rally.
Yeah, it's at what, 25, around $25
We're
now?
going to be at 25, 26. I think we'll see a 35 to 40% rally coming up over the rest of the year. I think that, silver has been very much depressed. We've seen all the bad press clippings of what some of the things are doing. But I do think that you're at prices. And again, I think that money is going to be searching for homes. And I think that the commodity market, and precious metals are commodities, they're hard assets, but they're commodities just the same. I think we're starting to see some breakouts in the commodity markets. And I think that's where a lot of money will start to flow. And certainly no better place than gold, silver, or platinum. Again, I think there's a lot of pent-up demand that's out there. I think that if the economy starts to show some weakness, people are going to look for the poor man's gold or the precious metal of silver. I think that there's a lot of reasons to believe, that we've watched over the years. I mean, we've seen some pretty wild swings in silver, from $49 to, back down to $6, back up to 35, down to 12. And I think this is just a market that is, relatively thin and relatively doesn't trade. But when the buyers decide to come in and new money starts to come in, which I believe that will be the case, I think that will be the catalyst because it will feed upon itself. And usually most of these big rallies will start with short covering. And I think that's what you see when the pressure is finally erased. You see first a real strong explosion up, then a little retracement. And if it's real, it's going to then gather steam and start to go higher again. Well, I think gold and silver are great opportunities right now. I think commodities in general are great spots to look for because I do expect a big market in commodities.
But all again, commodities?
Well, I mean, grain markets, I expect to see a big market. They finally had a turnaround. We've finally seen some positive action after just getting hammered and actually taking them below the input cost, the cost to plant. So I look for those to really start to explode higher. Markets in history have gone up 8.5% year over year. And since 1950, they've averaged 10% gain year over year. Not every year, but the average gain is what you do. So you have to be investing money that you can afford and not need for the rent payment or the mortgage or the car payment or food. And that money will grow over the next 10 years. No matter what happens, no matter if I'm proved right or wrong over the next 2 years, over the next 10, that money will grow. So wherever you want to choose it, just make sure whatever you're looking at is fundamentally strong. And that you believe that it's a company, if it's a company that'll be in business, and I think it's gold and silver and platinum, which I think is the greatest value right now. Platinum, I think, is just something that you can buy and hold, but you have to be able to not worry about selling it tomorrow. If you're forced to sell it and you're buying on borrowed money, you have no chance. You're going to be forced to sell it. And when you sell it, it's going to be at a loss because you're going to be selling it out of panic.
Economists surveyed by Bloomberg predict that the Federal Reserve will increase interest rates by a quarter point at its meeting on July 25th to 26th. This would bring the interest rate range to 5.25% to 5.5%, the highest since 2001. However, as price pressures have decreased recently, most economists expect that there will be no further changes to interest rates at the September meeting. Only 1/5 of the surveyed economists predict another rate hike by the November meeting. Given that the Federal Reserve is expected to raise interest rates in July, what do you think will happen to the price of gold? That's all from us. If you like this video, please like, share and subscribe our channel and click the bell icon to be notified of future videos.